Hey guys, welcome back to the channel. Now in this week, we're going to talk about Amanah Saham, we're going to talk about EcoWorld, and last but not least, we will be talking about the OPR hike. Guys, we do not own any of the shares mentioned on the slides, and of course, as usual, now what we say is financial advice. Please speak to a professional.
Okay guys, it's that time of the month again, and we're going to be covering a deep dive on Timecom and PPHB. And you can get the 20% discount, which is before 15th of May. Make sure to check it out. The links will be in the description and comments down below, where we'll be talking about the fundamentals of both of these companies. And just to tease you a little bit, we own one of these company in FIRL Pro. So make sure you check it out. The links are both in the description and comments.
All right, let's start with Amanah Saham now, guys. Disclaimer, another disclaimer, the third disclaimer is that we are not going to tell you about whether you should really apply for it. I think there are a lot of other videos out there you can check out that have done a good job on that. But what we will be talking about is really a breakdown of Amanah Saham as a portfolio. And it's important because if you want to know the future of Amanah Saham, you have to know what's inside. You know, what's inside the cooking, what are the ingredients in their recipe.
Yes.
And so that's what we'll be talking about. Now, just to start off, Jonathan.
Yeah. Okay, so this is the performance so far Amanah Saham Malaysia have been performing. So you can see that in the past, I would say from 2013 to 2019, they have been performing about 6% per year. So that's pretty impressive. However, recently in 2020, because of COVID, and then also because of inflation and interest rate hike, so right now it's about 4%. And they are actually trying to like compete with the Maybank's 12 months fixed deposit. So you can see their benchmark.
That's the benchmark, right?
Yeah. So initially it's about 3%.
Which is very, very close to OPR.
Yes, exactly. And now it's like 1% to 2%-ish. And yeah, so maybe in the future returns, we don't know whether it is still going to be around 4% or 5%. We shall find out later. Okay, but why suddenly ASM got so much of this traction, right? Is because they recently increased the fund size by 5 billion. So which means that they allow more people to actually subscribe or even buy this hard to get shares, because from what I heard, even
for non-Bumi Putras, right?
Yeah, this is actually for non-Bumi Putras, for everyone, basically. So what I heard from my friend and family is that they usually need to queue in a bank, physical bank branch, just to get this share, but sometimes they won't even have the chance to even get it.
Right.
Yeah. And so that's how like scarce it is, and right now they are giving you guys the opportunity to subscribe. So that's why there's a lot of hoo-ha around this ASM. But anyway, I believe not many people actually talk about their asset allocation and so about stock holdings. Yeah, they just see the 4%, 5%, 6% that they want to buy. And it's hard to get also. That's why it attracted a lot of people to buy it. Okay, so this is how they allocate their assets. They don't really have any English translation. So I believe also you guys can like read Malays, right? So
well, for those of you who do not know how to read Malay, we will translate for you.
Yeah.
So it's barangan
asasi pengguna. So this one is like your consumer products, right? Day-to-day necessity, essential goods. Yeah. So kewangan is your financials. Financial service. Penjagaan kesihatan is your healthcare. Hartanah, of course, you know, it is your properties. Utility is utility. And then, I mean, if you guys got any question on what you don't know what is this, just let us know in the comments. But the reason why I point these few key sectors out is because there's actually a huge jump in drop or even increase in this coverage. So if you notice their necessity products, right, consumer products, it actually dropped about 1.3% from 2021 to 2022. So this is actually very surprising because usually these, I would say, consumer products are the one that is inflation hedge, right? Kinda.
Yeah.
So the reason, I don't know why they actually drop it, and they increase their exposure in financial service.
Yeah. And so, you know, one thing that really caught my eye was kewangan, which is finance.
Yeah.
So, you know how their benchmark is Maybank, right?
Oh, yeah.
And so they are investing in Maybank, getting that 6-7% dividend, whatever it is now.
Yeah.
Right.
Yeah.
And giving it to you, subscriber, at 4%. Good business, guys.
Yeah.
Now, of course, this is 25% of the portfolio, which is the most significant portion. So I just thought I'd share with you guys like how you're actually being paid above the benchmark.
Yeah, exactly.
You take from the benchmark.
Yeah, exactly. Yeah, and then you notice also healthcare stocks. I'm not sure why they actually also dropped their exposure. Last time it was about 3.8, now it's at 1.56. And another crucial sector is that they increased their property segment. So they invested quite heavily. So yeah, this is their record so far for 2022. And let's check out their unit holders, which I don't think many of you guys would know or pay attention to this. So if you look at this, right, you notice that there's one group stands out the most, which is those who subscribe about 50,000 and 1 to 500,000. So in totality,
almost 20%.
Yeah, and they actually like bought about 13 billion. You can say it's like, because one unit is 1 ringgit. They fix it, like they cap it at that price.
Oh, you mean like 13 billion
units,
number of units?
Yeah, number of units, so that your number of units you can transfer.
And it's $1, right?
Yeah, it's $1.
So it's about nearly 14 billion ringgit.
Yeah, exactly.
Which is 2/3 of the.
Yes, exactly.
But 19% own 2/3 of the, right?
Yeah, you can say that. So you can see that it's quite popular. I mean, there's a lot of people trying to get their hands on these ASM shares.
That's right.
Yeah. Okay, and this is the fun parts because you get to know their stocks.
Number one.
Yeah, so you can see that about 9.4% of the company that they own is actually coming from Maybank.
Yeah.
And then you can see many banks also. There's CIMB Public Bank. There's even your Hong Leong Bank, M-Bank. Yeah, basically you can see all the KLCI index companies are all inside there. I mean, not only banks, you can see like TNB also is over there, Asiata also there. Yeah. Practically is almost every single stocks listed in the KLSC 30 index. And the top 20 stocks actually make up about 51.71% of the stocks. Yeah, almost half. And it's currently valued at around like 11.2 billion for these 20 stocks. So that's actually a huge amount of money that is put into these few companies. And then the remaining balance, about 10 billion-ish, is put into like random sectors that is shown.
So most of their funds are in these liquid securities, liquid assets.
Yes, exactly.
So here's a bit of a mystery to me. In fact, when I looked at Amanah Saham, this was one question that really popped up in my mind. And I do not have the answer to this, but I like to highlight this mystery. And for those of you listening, if you know the answer, let me know in the comments, right? Or if you're too scared to tell me the answer, that's fine as well. Okay.
Yeah,
anyway,
exactly.
So as we know that Amanah Saham is almost like pegged at $1. The $1 never changes. But a lot of what they invest in is in
KLCI index.
The KLCI or other even non-KLCI index stocks, right? I'm quite sure there are.
Yes, correct. Right? I mean, you can see that there's one PNB Real Estate.
Yeah.
LSE.
Okay, for example. So the question is, how does it remain as one? Because one unit represents $1.
Yeah.
And then the value of the entire Amanah Saham is just 1 ringgit times the number of units. That's you get the assets under management, right?
Yes, correct.
But we know that the KLCI and I mean the stocks in here fluctuates up and down. Let's say it's the KLCI, right? Yes, the historically the past 5 years plus, the KLCI has been flat. So I guess they have a reason. But how about before? When it went up quite a bit or went down quite a bit. So if that year it goes down 20%, let's say the KLCI drops 20%, does that mean that? So how does Amanah Saham retain that $1?
Right. That's actually a big question.
Let me know, guys. Let me know.
Yeah, exactly. Okay, so this is another interesting thing. They share about their portfolio turnover. So how frequent they actually buy and sell their stocks. So you can see like previously, last time in 2019, they actually bought and sold about like 57% of their stock holdings are actually they bought and sell. But in 2022, it actually drops. So they kind of maintain most of the stocks that they hold.
Long-term shareholder.
Yeah, exactly. But I don't think a lot of people know about this catch is that there is a few fees. Of course, it's not like you buy and then you're not paying anything. There's actually a hidden fees on.
Right.
So basically the fees is basically number one is the switching fees. So basically when they buy or sell companies, right, there's like a minimum charge of 25 ringgit per transaction. And then there's also annual management fees. Those who are actually managing that fund, they actually get a 1% cut per annum from that fund value. 1% from 20 billion.
Very nice.
Yeah, that's actually a very
so you see, in addition to the volatility, there are all these fees as well.
Yep.
So how does it stay at $1?
Yeah. yeah, that's a big question mark that you guys want to know. And last but not least, there's also these annual trustee fees, which is also, I don't know what, basically they help you to keep the fund safe or running. So yeah, that's about like 0.08% per annum from that.
So 1% on 22 billion would roughly be 20 million? Very nice.
Yes. And then there's a lot of miscellaneous fees that you guys may want to know. So yeah, that's about it for ASM.
Yeah.
And the next company we're going to be looking at is EWINT.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Yes, World International. So recently the price doubled, more than doubled actually. Yeah. And we are not like huge fans of construction of property.
Yes.
I think if you follow us for a while, you know that is our position. But why is it interesting?
Yeah, okay. So recently they actually announced a 1.5 billion capital reduction. And basically they're trying to sell their share capital. And get that 1.5 billion to distribute back to the shareholders.
Right.
So that actually, if you notice, right, the share around here is about 20 cents. So I believe...
so 600 million. I would say 650 million market cap, somewhere there.
Yes, exactly. So later I'm going to go to the numbers. But basically, if you manage to get at the bottom right, and versus the dividend that they are potentially going to distribute, it is actually more than
way
what
more,
it was.
It's 300%.
Yes, exactly. So that's why it was doubled in just a span of I would say 4 to 5 months. Okay, so this is the proposal. Basically, they're trying to reduce the share capital from 2.5 billion to about 1 billion. And then they also announced that they're going to be giving back the money. So about 900 million in total will be paid back to the shareholders.
Right.
So if you calculate per share basis, it's about 37.5 cents per share. And if you manage to get at the bottom, I believe the bottom was around 20 cents each.
Yeah.
Yeah, that's why there was a huge uptick in share price. But if you look at their financials, fundamentally, they are actually still making losses. Most of their sales is actually coming from overseas, like for example, in the UK or even in Australia. So it's not really making much of a meaningful contribution to the company. So I believe that is why the companies decided to do this capital reduction.
Yes.
To actually at least somewhat add value to the shareholders despite making losses fundamentally.
Yeah.
And try to maybe restructure
their
organization.
Also, I guess, what's next, right? Because why would I hold on after the dividends? That's a big question people ask, right?
So now you want to know whether you want to buy, is it worth to chase or not? So I believe that insiders are already in since October 2022 because there was no reason why the company actually went up 100%.
Even before the announcement.
Yeah, so back then there wasn't even any public info. So and then they were announcing losses during the quarter. There's basically zero catalyst. But then the share price start to go up. So that's where I think the insiders were actually buying and know about this news. But there was actually a subtle hint, but it wasn't a very obvious hint.
Okay.
Subtle as in they say that they're trying to increase their net cash balance in their company.
Okay.
And also they want to distribute 900 million to the shareholders. So yeah, this is a subtle hint, but they didn't say how are they gonna make that 900 million?
Okay.
Because if you look at the profit cash flow, it's not gonna help them reach that goal. So I don't know. This one is, I think you have to see more of these kind of practices happen. Then maybe you can click and start to think that, hey, maybe they can use capital reduction.
That's true.
But so basically there is not much meat left because the company already went up more than 100%. Although the analyst Maybank actually initiated a target price of about 66 cents per share, which is another 20% ish upside. But I believe that it's pretty hard because everybody already knows about this news and the dividends that they're going to pay out. So the next catalyst that if you want to actually invest in EWINT is basically their property sales in the United Kingdom and also Australia, whether they can actually provide any positive contribution to the company. Yeah. So that's about it for EWINT.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
And the next company, we're going to be...
Well, it's not a company. Interest rates are OPR, guys. Yes. Recently, it raised to about 3%, 25 basis points. Now, this is a surprise because the Federal Reserve actually hinted that they want to pause on the hikes in the US. So then suddenly BNM decided to raise.
Right.
Now this, I mean, you can say they are being silly. One group say, why do that? If the US is stopping, why are you not? Another way to think about it is that, Bank Negara is very independent.
Yep.
Bank Negara basically says we're going to raise or hike based on internally generated criterias rather than, what the Fed is doing. Obviously, they pay attention, but, they are independent. And, basically what Bank Negara is doing and why they're doing it is because they feel that the economy is quite strong. And indeed, it is quite strong because if you look at the GDP numbers 2022, it's nearly 9%.
Yep.
And it serves dual purpose. The first is to recognize that the economy is quite strong. So therefore, they will raise rates.
Yeah.
However, to also curb down spending and debt accumulation, Malaysia has one of the highest household debts. And a lot of the growth last year was fueled by either a combination of additional debt or something like EPF, for example. So they want to kind of put a hold on that.
Right.
All right. So dual purpose.
Yeah. Okay. So what's interesting is because I found out that this 3% hike is actually the same level as in 2019, 2016.
Yeah, it's pre-pandemic.
Pre-pandemic. I mean, I don't see any shock when they actually raise rates because I thought it was like kind of like an expected kind of like situation that they have to raise rate. Because right now, I mean, I see in Malaysia, I don't know about you guys, but then I don't feel like there's like a recession here.
Yeah.
It's like, I mean, we are still like functioning very well. Everybody is still going out, still spending. So, I mean, definitely this will stimulate economy.
Well, the E&E sector is a bit dampened.
Yeah.
Internally, the spending, as you know, it's not really slowing down per se. Property, things like that, people are going out to buy and figure out. So honestly, the recessions are not, like you say, the feel is not quite there, which is exactly why they're raising the rates, right?
Yeah. So that's actually an interesting thing. And then again, if you look at US, they actually did raise about 0.25 percentage point, but they say that they're gonna be like ready to pause in a future future Fed meetings. Yeah.
So the reason it's being paused right now, at least the way I understand it, is combination of many things. The first is inflation seems to be abating. So, you look at a lot of the major commodities, they might be at a year low, but they're definitely quite far off their peak. Oil and gas being the number one. We follow PMB Tech, silicon prices are down.
Yes.
Lumber prices are down, copper, iron, all these are down. All this all linked to real estate. And then as well as there's the commercial property issue in the US, where a lot of them are indebted. They can't really manage themselves well. So imagine if you raise rates and commercial property are suffering, it's going to put a lot of pressure. It has already put a lot of pressure. And then the third one is that there could be higher unemployment on the horizon. So, the Fed is at a wait and see kind of approach right now, where, look, if they go too fast, there's a good chance that they will face massive unemployment, which is not what they want, right? The Fed wants low inflation and low unemployment.
Which is like the juggle.
No, not low below 2%, but low like at around 2% like that.
Right. And actually the the news, right, that they want to increase interest rate actually caused a few companies to actually drop. But before that, this is the OPR.
So I created this chart and I think this is very useful for all of us. It's called financial repression. It's just a fancy word for the OPR minus the CPI.
Okay.
So if all those below this 0% here is when we are being repressed, meaning the inflation is higher than the savings rate. The savings interest rate, right? So you can see over the past 10 years, there's really only it's only about 4 years where we face this. And of course, 2021, 2022 were the big ones. And then 2023, it is due to recover, right? But this is based on an assumption of with the current 3% OPR rate and then also Malaysia's interest rate at only slightly higher than 3%. 3.5, nearly 4, around there. Now, in contrast, and why I highlight this is, and why, in my opinion, BNM is doing a great job is because when you compare it with the US, for example, you can see the financial repression was actually already starting in 2015, right? That was the peak when US Treasury, so in the US, we don't use their federal funds rate or their OPR. We use their 10-year Treasury, 10YT, less the CPI. And you can see since 2015, it's really been declining. And then it was flat for a good 2 years before COVID already. So also repression also is going on. And of course, with COVID, bang, right? You can see a much bigger. And imagine if the Feds, in a way, didn't step in, right? The repression would have kept going
down.
Right? It's crazy. Every year you're losing a net, assuming you save money, right? And put it into treasuries, you're losing, almost 4%. And most people, at least a lot of people, don't put their money in treasuries or bonds as well in the US. So you can imagine they just put in a savings or checking account. They're losing a lot more. So you can see the comparison with how each central banks manage, and you can see Malaysia is managing in a much more stable way.
Yes, exactly.
Yeah.
And then
so another repression would be the companies.
Yes, exactly. So just that one announcement of hiking in interest rate that actually caused tech companies to actually drop quite a lot. So if you notice that Opstar is one that recently went IPO'd, it actually went up 3 to 4x its IPO price, but then after that it went down 24%, which is kind of expected because it went up too high already. And then another company that we actually covered in our FIRL Pro Telegram group, which is ATEC, Aerialist Technology. So that company actually also went down about 26%. However, we actually managed to capture the before it actually went up, which is about 1 ringgit and 79% on 24th of November 2022. Basically, I have attended one of the management briefing, not ATEC, but it's another company that has similar customer profile as ATEC, which I'm not gonna review here. If you want to find out, just go to our FIRL Pro Telegram group. And basically, I shared that because of the customers' optimism on the outlook, in terms of their sales and everything, right, that actually gave better results for that particular company as well as for ATEC. So which is why they actually went up about 50 to even 60% in a span of few months. And so basically, if you want to know more about our discussion on how we share about the Telegram portfolio with our members, make sure to check out FIRL Pro. The links are all in the description below. And I think that's about it.
So just to really summarize, right, because obviously the question is, as investors, how should you take in this information about OPR? And how should you prepare yourself for even further rate hikes? So I think if they do not continue to increase interest rates from here onwards, it's not really, it's easy to understand. But if they do continue to increase interest rates from here, it might be a new environment for you as a Malaysian investor because you're not used to, interest rates rising. And so how does this actually affect some of the investments you might make? Now, of course, the effects that I mentioned on the slides are not exhaustive. There's, of course, a lot more. But here are the three that I want to highlight. The first is banking. So according to The Edge, home loans, the growth, right, have actually slowed, right? 6.8% as of August. And then as recent as March this year, it's down to 5%, which is actually below pre-pandemic
level.
Yes, around there. So of course, and if you are raising interest rates, the cost of
borrowing will
increase, and so people will find it harder to buy, right? And banks will be like, the chance of growing will be a bit slower as banks, and it also puts potentially some pressure on the banking sector because I'm not sure if the moratorium is over already. I think it is.
Yes.
And now people are paying full interest, probably paying back interest from the past as well. So the existing customers within the bank may face a lot more pressure and might default and go through bankruptcy. There's a risk. Now, the second sector, which obviously as Malaysians is very important, which is the tech manufacturing sector.
Yes.
Regardless of what kind of company there is, it's going to go down, right? Of course, certain trusted names like Vitrox will go down less than an Aurelius or an Opstar.
Yes.
I didn't see the effect. I didn't check the effect that it has on Vitrox share price, but I assume
it's very minimal.
It's minimal, right, comparatively. Yeah. So the question is, so internally, right, just to give you guys some heads up, we are starting to become more interested in technology companies. But it doesn't mean we have positions, we don't. But we are starting to pay more attention. And one of the criteria is cash rich and not so cash rich tech companies. Because it's very simple. Every company, generally speaking, has some sort of cash on the balance sheet. And that cash is more valuable when the price of that cash goes up, which is interest rates.
Yes.
So with interest rates going up, one would expect tech companies, i.e. companies in a volatile industry that have more cash, not only do they have more buffer for working capital or whatever, now they also earn more interest on that cash. So it becomes even more valuable, right? So if you're going to tech, cash-rich tech companies are going to, in my view, to be a much safer bet. And then the last one is dividend stocks and REITs. So this is very interesting. For dividend stocks, I believe they will be slightly less popular going forward, simply because now the gap between interest rates and dividend stocks have shrunk. Just a year ago at 1.8%, 1.85% that, or 1.75%, sorry, that Malaysia had. There were a lot of companies with 3% dividend yields, and they were a lot more attractive. Today, now it's at 3%. So if you're going to invest in a company, it's 4, 5, 6%, which they exist, but a lot fewer.
Basically you need to double the risk-free rate itself. So it's like 3%. So it's like you need to find like a dividend yield of like 6% or more than that.
Yes. So for REITs, how they will be pressured, also for the same reason, right? They are almost like a dividend stock, basically. Yes. People like the high dividends, but generally they have higher than the FD rates, typically. But where I think they will get affected a little bit more is the fact that they usually borrow money to invest into real estate. And then, of course, now their cost of funding will go up.
Yep.
So all this will mean that there will be more pressure on REITs in terms of their profits. And so even though there's a law that says that REITs need to pay out 80% of their earnings, 90% of their earnings to shareholders, but if the profit drops as a result, your two things, right? Either, most likely you're going to get less dividends, like dollar amount.
Yeah.
Your yield can go up, but your dollar amount can still go down because the price of these REITs might actually go down over time. Because now it's less. Now, of course, this you cannot just apply this on REITs as a whole, right? There you have industrial REITs, you have warehouse REITs, whatever REITs, right? This will probably be a little bit more applicable to commercial REITs or maybe even residential REITs, where let's say now, if you were the guys managing the REITs and your cost of funding can go up, which is your interest rates, how will you earn more money? Either you build more rooms or shop lots or whatever, which will take time and capital, or you try to renegotiate the rent with the existing tenants, which in and of itself is very risky because people now are a lot more work from home ready, and now there are a lot more options out there in terms of getting a place. Don't let our landlord hear this.
But
exactly. So these are the three big factors or 3 big areas that I think going to be affected by the interest rates.
To add on about the REITs, right? Since now their profits will be like most likely going to get hampered. So which means that if they cannot generate money organically, I think they have to like raise money from shareholders, which is actually pretty smart for Radium Development, who actually just recently went IPO. Yeah, so yeah, there's actually 2 ways. One is you have to raise money from shareholders, or you actually just go IPO. So Radium, that recently just went IPO, it did a good job. Right timing.
Yes. So yeah, maybe the knock-on effect is that we'll have more IPOs. Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
Okay, so this is the final takeaway. Very simple one. Basically, number 1 is EWINT's room for growth.
It's not really there.
Yeah, it's not really on site. That's the answer that we have. And then the second one is more on interest rate hike opportunities. As MJ pointed out, that the tech industry looks a little bit more exciting. We hope that it will go down even more, so that there's more interesting opportunities will arise from there. But not a financial advice, but just pay attention to the industry. And the last point is basically Amanah Saham Malaysia's Overhyped. Well, if you look at the breakdown on the stock holdings, you kind of know that they are buying companies that are largely in the KLCI 30 index.
And of course, my biggest takeaway is the fact that they use Maybank as a benchmark, invest in Maybank and pay you and tell you that they beat the benchmark, which is Maybank.
I mean, it's smart lah. Smart. Yeah, so and before you guys go, just want to share you guys on the FIRL Pro performance.
Yes.
So our April 2023's performance has been
worst month, I would say.
It is. I mean, we went from double digit about 10% or 11% to now 8%. I mean, it's down like 3%, but we are still on the up.
Yeah, it's still positive. And of course, our Telegram portfolio.
That one is still on the...
Also very 50-50, but of course, there's one big winner.
Yes.
If you want to know the winner, again, hop onto the Telegram, hop onto our FIRL Pro program.
Yes.
And, in this program, we have a lot of support system, right? Whether it's the Telegram, whether it's very easily digestible reports, which you can finish reading in less than 10 minutes. But if you want to just give it a taste, right? You want to see what's it all about, go check out our free sample. And if you like it, do hop onto the program. If you don't, regardless, thanks for supporting us all this time. And guys, I hope to see you in the next video.